The webinar will begin in 1 minute. Welcome, everyone. We are pleased that you have joined us for today's webinar titled State Income Tax and Withholding Rules. The webinar will last approximately 15 minutes, and at the end you will be given an opportunity to receive supporting materials by email free of charge to you. You will also be told how you may email questions related to today's content to the presenter. Today's presenter will be Linus Sugis. Linus is the president of Advanced Underwriting Consultants. He and his team answer tax and technical questions posed by producers every day. Linus also spent 14 years working in the home office of a life insurance company in various roles. He also started, ran, and sold an estate planning law practice in the Nashville area. Linus will draw on his legal and life insurance experience during today's webinar, and here he is.
Thank you very much, Amber, and welcome everyone to today's webinar titled State Income Tax and Withholding Rules. Before we get into the meat of the webinar, let me remind you of a couple of things. First of all, these webinars are free and open to all financial professionals. They're held on the first Wednesday of every month. And so if you feel that you are getting some value out of the content and you know someone else who might get similar value, please feel welcome to invite them. We're glad to put them on the list and glad to make them part of our audience. Our next webinar will be on Wednesday, June 5th at our usual time, 11 o'clock Central, and it will be titled A Unique Indirect Section 1035 Exchange. So if you know of someone who might benefit from that content, feel welcome to invite them. Before we get started on today's topic, let's go ahead and decide what it is that we'll talk about in July. The three choices are reviewing Form 1099 LTC, the Transfer for Value Rule Revisited is the second choice, and the third choice is fighting with the IRS. I'm going to go ahead and launch the poll and invite you to vote for July's topic. Still waiting for a couple more votes. Give you a couple of seconds. All right, I'm going to go ahead and close the poll. Thank you for voting. Next month, we will discuss the Transfer for Value Rule Revisited. Thank you for voting, and we'll look forward to that in July. All right, let's go ahead and do a quick overview of state income taxes. And really, I want to make a few points in general about state income taxes. Each state is different. Each state takes a different approach to state income tax. And so when Jennifer and I get calls at Advanced Underwriting Consultants where they are state income tax law specific, understand that because each state has different rules, it's hard for us to give general answers. And so we'll ask for which state we're talking about. But in general, most states, if they do impose an income tax, use the federal tax return as the starting point for calculating taxable income. Many use federal adjusted gross income as the starting point for calculating taxable income. They don't usually start with federal taxable, they usually start with gross income. And states make various adjustments based on the things that they favor. where certain kinds of income may be excluded. Retirement income, for example, is excluded from counting in a lot of states. But you got to know which state we're talking about in order to get really specific results. So, and states are different with regard to the type of tax regime that they impose on individual taxpayers. For example, some states, such as Idaho, have a completely flat tax. No matter how much taxable income you have in the state, the rate is the same no matter how much or how little income tax that you have in that particular state. California, on the other hand, has a graduated rate. And that means that those who have particularly high levels of income will be in a higher state income tax bracket than those who have a relatively low state taxable income. And then we've got a few states, Tennessee's an example of that, that have no state income tax at all. And so states are all over the board. That's why you got to know which state we're talking about in order to have accurate information about how that state approaches income taxes. And then to make matters even more complicated, there are a minority of states that only tax certain kinds of income. For example, Washington state only taxes capital gains taxes. All other kinds of income are exempt. And so it really underscores the fact that you got to know which state that you're talking about in order to figure out what the state income tax result might be for certain kinds of income. The thing that affects a lot of us who work in the life insurance industry and the financial services industry is income tax withholding. And it's an important concept to coach our clients through because I think there are a lot of misconceptions about what withholding is. I think the first thing to understand is that in some cases, tax withholding is actually mandatory. And the most obvious situation where that might be the case is if we've got a distribution from a non-IRA qualified pension plan that is eligible for rollover, there's 20% mandatory federal income tax withholding. What does that mean in the states? Well, it means that in some states, because the federal withholding is mandatory, in certain states, state income tax withholding on an eligible rollover distribution is also mandatory. And in a subset of those states, if federal withholding is elected, even where it's not mandatory, state income tax withholding is also going to be required. And so you got to know something about those rules and the state's approaches to those rules and whether or not the state requires withholding if federal withholding is either mandatory or chosen. In some instances, a taxpayer can voluntarily choose withholding in a particular state. The taxpayer can choose to have no withholding done, or the taxpayer can choose to have some withholding done on the state level. In a lot of instances, voluntary withholding is also available on the federal level. So you got to know something about that as well. And the overarching thing about all of this is that withholding is a guess, right? Jennifer and I get calls from people who say that, withholding is a payment of taxes. It really isn't. It's an estimate of what the taxes might be, and you got to settle up with the IRS and the state withholding or the state taxing authority come tax return time to figure out whether the withholding and the actual tax liability match up. And if they don't match up, that's when you get a refund or you have to pay additional tax. So withholding is a guess. And when you're talking about this to your client, I'd encourage you to use that kind of language that, withholding is an estimate of what their tax liability might be. And they want to be as close as possible to what the actual liability is so that there are fewer surprises come tax filing time. And that leads me to this wonderful chart. It gives you an idea of what the state income tax rules are in each of the states, what the top tax rate is in each of the states, and each state's approach to income tax withholding. Now, I'll leave this up for a second so that you can get a sense for what the withholding rules and what the tax rules are in the states in which you work. But this chart is a resource, and the good news for you is that if you feel like it will be a valuable resource for you, contact us after the webinar, ask for the materials upon which this webinar is based, and we'll make sure that we get you the newsletter as well as the chart that has this information on it. A couple of things about the chart, particularly the information on here with regard to withholding. First of all, we believe that this chart is current and accurate. However, state tax rules and state withholding rules can change in a heartbeat. And so the strong recommendation is that you double check and make sure that the information that you may be looking at from the chart is actually accurate for the situation that's right in front of you where you're trying to help your client. The other thing is this. Some states have mandatory withholding, some allow for voluntary withholding, and carriers are kind of a little bit all over the place about what rules they follow. And I think part of the reason that carriers are all over the place is the penalties associated with not doing proper state income tax withholding. They're a little bit more nebulous than they are if you don't do the right withholding from the federal government's perspective. And so a lot of times in our experience, carriers are not as rigorous about keeping up to date about withholding, or in circumstances where there's some room for interpretation with regard to the withholding, some carriers go one way and other carriers go another. So while we believe the chart is a helpful tool as you're working with your clients, the strong recommendation is always, if you've got any question about withholding, whether it's mandatory, about what approach your client might take, get as much information as you can, including information about from the carrier about state income tax withholding. So what are the things that I hope you take away from today? The first thing is, first of all, each state has its own approach with regard to its own income tax rules. The second thing is that if mandatory withholding is involved with the distribution, I think we owe it to our clients to give them a heads up about that and make sure that they're okay with the idea that mandatory withholding, both federal and state where it applies, might interfere with their overall strategy. And so we need to know something about those rules so that we can properly warn our clients. I think we also need to coach our clients about the fact that withholding is a guess about future tax liability rather than a prepayment of actual tax. And I think it's an important concept for our clients to know about so that the drama is reduced come tax filing time, which is long after the distribution upon which withholding and taxation is based. For a lot of our clients, making choices to avoid withholding is important for them. For example, while mandatory withholding applies to an eligible rollover distribution from a qualified plan that is paid to the client, if the client intends to roll over the money, the rollover is done directly without coming through the client's hand, we're able to avoid withholding with regard to a rollover. And so where we've got a choice, doing a direct rollover as opposed to the indirect 60-day rollover may be able to help the client avoid a withholding situation that doesn't work for the client. In some cases, voluntary tax withholding is the right choice. Clients don't like to have to pay extra come tax time, and voluntary withholding can help them manage their income tax result come tax time and help them to break even or perhaps get a refund. And for some of our clients, that's the right choice. And then finally, asking a carrier about their approach to a specific state's withholding rules can help avoid misunderstandings when we're asking for distributions from qualified plans, from IRAs, from annuities, or from life insurance. And we hope the chart can help you there. I'd like to thank you again for joining us for today's webinar, and I'll turn the program back over to Amber to wrap it up. Amber?
Thank you for joining us today. As a reminder, if you would like to receive supporting materials, feel welcome to email us at asktheexpert@advancedunderwriting.com. You may also email questions related to today's webinar. Feel welcome to join us for the next webinar on the first Wednesday of next month, June 5th, at this same time. Next month's webinar will be titled A Unique Indirect Section 1035 Exchange. You can also find an archive of past webinars on our YouTube channel, Advanced Underwriting Consultants. Please subscribe to our channel. It helps us to keep making free webinar content. Today's presentation will be posted on our YouTube channel by the end of this week. Finally, for more information about the services that Advanced Underwriting Consultants offer, including phone consultation and newsletter licensing, feel welcome to contact us at 615-224-1291. That's 615-224-1291. Thanks again, and best wishes for continued success.